Joined by Mark Bayley from FIIG Securities. Mark, good morning to you. Now, the market really hoping to get some idea of just how hard Brexit will be as they hopefully lay out a bit of a roadmap ahead. Given, though, that this is not new news, do you think we're likely to see a significant market reaction?
Good morning, Leanne. I mean, I guess it just depends what is going to be actually in the detail. Now, there's rumours in the UK press over the weekend that after Brexit is triggered on Wednesday, the 29th of March, Theresa May the next day is going to send a very detailed 8-page document to some of the key leaders of the European Union in terms of their member states, kind of detailing precisely what Britain is looking to achieve from its Brexit and the areas that it wants to cover. Now, that's one thing. Whether the UK will manage to achieve that and on terms that is better than at the moment or comparable to at the moment is another thing. So there's still a lot of questions up in the air, and there's been stories again circulating in the press, especially with regards to that key financial centre of London and the international banks that do have their European headquarters there, that you are seeing some slightly drift back in towards Europe, back onto the continent, and also doubling emerging as a very, very credible centre in terms of those people that are looking to move outside London but stay inside the European Union. And that's going to be the key for the UK economy, which has performed surprisingly well in the meantime. But in terms of those negotiations, they're going to be really, really tough. The EU is not going to want to give too much ground in terms of the clauses and the conditions that it attaches to those, because it doesn't want to make Brexit attractive. Because, you know, if it does, then you've got potentially Spain, maybe Italy and Greece looking at those negotiations going, well, actually, it turned out OK for Britain. We can go down the same path as well, and it leads slowly to the disintegration of Europe as we know it. So those negotiations are going to be really tough, and it's impossible to say how they're actually going to pan out.
And of course, in the context of all those other elections happening across Europe throughout the year, it's going to be really interesting. Now, I think the pound in particular is going to be one space to watch. We saw it selling off dramatically on Brexit, on that vote. Then, of course, when we were hearing talk of hard Brexit, it sold off even further. I mean, how much more selling can we get, I guess, on the same news? Do you think for the pound it's going to be a kind of sell the rumour, buy the fact type event?
Yeah, I was listening to John Noonan, and he's usually got a really good handle in terms of the currency markets. Look, I think that it depends on how the negotiations go, and if it looks like the UK is not going to get a favourable negotiations and outcome, then I think potentially you could see sterling continue to fall even further. I agree at the moment that's not likely to happen, and it's probably as negotiations go on, and probably we'll start to get a better sense in terms of the different size positions over the next few months. But until that is established, I think probably the pound does kind of trade in a vacuum and probably continues to range trade. Yes, it will be susceptible to various headlines and inflation figures and economic data, as always is. But in terms of the impact of Brexit and those negotiations, I think that only after kind of positions are entrenched and we know what the UK is asking for and what the EU is prepared to accept as well, will we have any kind of major movement in terms of the sterling.
All right, fantastic. Mark, it's been wonderful talking to you this morning. Appreciate all your analysis. Thank you so much.
Thanks, Leanne. Have a good day.
Mark Bayley joining us.